So what do you have for us today?
All right, guys. So
HBA
looks like we
loan.
have, what do we have? We have about 25 people here. Okay. So you guys probably know I'm a mortgage lender for Tried and True. I only do a little bit of real estate here in San Diego, like in the two zip codes that are part of my neighborhood. Because I don't want to travel and do stuff like that. So I work a very small real estate area, and that's okay. And but as I've been following this whole thing forever, and you know, I don't know. I feel like it's things are maybe going to play out, but I think it's going to be incredibly hard for buyers, especially on the lower end, but even move up buyers into the $1 million price point, which we're seeing all over California. And frankly, because, first time home buyers struggle with money, people buying $1 million home, well, they've done a lot in their lives to have enough money to buy $1 million home. So they're savvy about money as well. A lot of times the difference is they might be selling a house and having some equity from the house they sold, giving them a little bit of liquid cash that would potentially ease the stress of having to pay a buyer's agent. And a lot of those higher end people, I think also they respect service providers because they realize that by hiring you as a service provider to do a lot of the heavy lifting, finding their house, it's going to free up time for them. And someone that's, can afford a $2-3 million house, $800,000 house, they probably like their free time. So as a buyer's agent, I believe that we have a lot of value. However, we have a challenge of convincing the public how we get paid, because even though it is brand new for us to have a conversation with our buyer and really put them on the hook for paying us, well, those buyers, they have like 0.01% of knowledge about what we're going through. But they probably have hundreds of stories of friends and family over their lifetime that have mentioned they've never paid their buyer's agent, and that wasn't common. So we've got a hurdle to get over that. And there's a huge concern about potentially working with the buyer, finding out that there's a compensation offered from the seller, and then maybe it doesn't work out, or taking a buyer to see a property that you can't end up negotiating a property, and the concern that maybe they walk. Maybe the house is more important to them than the relationship and paying their buyer's agent, which in my feeling on that is that's probably going to happen, because we're all working with humans, and humans they care about themselves more than anyone else for the most part. So here's what I've been looking at is different options and stuff. Since I do a lot of mortgages, what I want you guys to think about, and what I've shifted from talking about, is the typical DPA program, down payment assistance. Think about reframing your language to calling it a home buyer assistance program. And I have of all the programs that I have access to and I pay attention to. I've done a lot with the California Dream for All, the big 20% one. I'm a huge fan of that. And I love all these programs. They're not, the free money isn't free, and they're not the prime rate mortgage loans. What these home buyer assistance programs are an opportunity for somebody to get into a house and to pay you or their closing costs or add to their down payment. So there's a lot of great ones. CalHFA, their typical 3%, 3.5%, depending if you go FHA or conventional with them. It's a great program. It has loan limit, or it has income limits. It has first-time buyer requirements, meaning you've never owned a house or you've not owned a house for the last 3 years. So most programs kind of follow that guideline. Now I've searched really hard for us and for Tried and True to create a program that can benefit you guys. And to my knowledge, there is no one on the mortgage side talking about this yet. And so think about if you have lower income, first time home buyers, people buying at or below the county, your medium home price in the areas you work. That is our target with this product. However, I don't have a income limit. So your borrower can make 300 grand and still benefit from this. If for some reason he makes 300 grand and all his money is put into some sort of, financial, tool that he doesn't have access to that money, some type of CD or something, who knows, the stock market, he doesn't want to take it out, but they easily qualify because they have plenty of income. They might need 2 or 3 extra percent to cover their closing costs, cover their down payment, and cover paying you if the house that they want to buy doesn't have compensation. So this program is very unique in the way that it's a down payment assistance, which I'm renaming homebuyer assistance, because the 3.5% second can be used as the down payment, can be used towards closing costs, any cash to close. And that cash to close can include your 1%, 2%, 3% commission, whatever it might be. Now, if you're not a fan of these programs, that's okay, but you might want to rethink this, because if you find people that you believe are kind of on the fence, or you want to get them to buy into you even more, show them how to get financing that helps cover this. And so the way this program works is essentially a very common down payment assistance style, but we can use the money to cover the buyer agent commission, which is the biggest challenge that buyers are going to face and you guys are going to face. So they can get 3.5% of the purchase price. They can go into jumbo pricing. So you can use this at $1 million. That's $35,000 of a second. Just to pause for a second, the reason that this works with paying your commission is because it's a first and a small second. A single first mortgage, conventional 20% down, 5% down, an FHA loan by itself, you cannot finance any of this. But because it's a second, that second money can be used however the buyer needs to, based on this lender and this specific program. So it works with condos, SFRs. You can have a non-occupant co-borrower helping qualify. You can still get up to 6% seller concessions, even if you're paying your buyer's agent 2 or 3% with that down payment. It follows all the traditional government FHA guidelines. So it's a simple process to underwrite and pre-approve. The FICO score is all the way down to 580, so a lot of people can qualify, and we can go past up to potentially 57% of DTI, which is their monthly income, and manual underwriting this process. So this particular loan they've really found a way to stretch almost every single little benefit a little bit further. And if you want more information and you want to get your buyers, into a program where you're sure that they can pay you if they need to, they're sure that they can pay you if they need to, allowing you to show them every property that they might want to see, and explain to them, once you are at the point where you're making an offer and you're not asking for offering list price and asking for 2 or 3% back, because that's already covered over here, you're going to explain to them that their offer is going to be that much stronger in a competitive market situation. We can close in the typical 30 days. So this program is it's a very functional and beneficial program for what's going on right now. So if you guys have more questions about this, just reach out to me. I'm happy to talk to you guys more individually. And any of the tried and true guys can use this loan with you guys. So reach out to your favorite TTHL guy and get your clients pre-approved. Good talk. Is everyone muted?
So,
You're muted.
so that's good. We have a lot of we're going to need a lot of solutions, especially in the beginning, while we're all trying to kind of figure this out a little bit and get into a flow. And sure, home buyers are going to be coming in with a lot of questions and things like that. So we are going to need solutions. There's probably going to be more and more coming out. I don't think that this is the the end all as far as the 17th being, this is how it's going to be moving forward. I think we are going to see revisions to this as we kind of, move on through the year. So
Yeah.
I'm curious to see what other loan products come out. I mean, this one's already available, but it's a great use for this product that people aren't thinking
This
about.
one was developed maybe about 6 months ago. But I was talking with the AE about it, and my main question was, how can I use that money? And because with the Dream for All, you were able to kind of do some stuff with it, but we weren't even talking about paying commissions at that point. So that was a big one. Can it be? And while I say this is not a free option, it's not, like you said, it's not the perfect solution. It still costs a buyer some money to use this, but it solves a huge problem. And it can get them to the finish line. It can get you a stronger relationship and you a deal closed.
Yep.
So that's where it becomes a huge tool for us.
Yeah. So just another one in the tool belt. So, all right, cool. Well, good info. Thanks for coming on and sharing that with us. If you have any questions, reach out to Andrew. If you need his contact, let me know, or it is in the online office as well. So, cool. Well, I'm going to get moving on to the next thing here. Let me share my screen. So a couple points I'm going to go through first, and then we'll get into the actual forms. Today we're going to go over the PSRA, the BRBC, the SPBB, and actually those ones right there is what we're going to go through today. So all buyer rep stuff, and we're going to talk about kind of flow, how's this going to work when you're making offers? And this is what we're going to kind of go through today. So, all right. So obviously beginning August 17th, which is coming up in just a few days, MLS participants working with a buyer will be required to enter into a written agreement with the buyer prior to touring the home. I've had that question come up numerous times. When do I have to do this? When do I have to have the agreement in place? It's prior to touring the home, and that is either in person or virtually. So basically, once you start working with the buyer, or prior to going to tour the home, is when you need to have a compensation agreement in place. A reminder on what does it mean to tour a home. Touring a home means when the buyer and or MLS participant or other agent at the direction of the MLS participant working with the buyer enter into the house. This includes when the MLS participant or other agent at the direction of the MLS participant working with the buyer enters the home to provide a live virtual tour to a buyer not physically present. A home means a residential property consisting of not less than one, nor more than 4 residential dwelling units. So what does that mean? Single family homes, 1 to 4 units. This is what it applies to. If you're doing apartments, if you're doing commercial, if you're doing anything else other than a 1 to 4, this does not apply. So this is, if you're going to go show a 5 unit or an 8-unit, this does not apply. So we're talking about residential 1 to 4. So mandatory, oops, a little too far, mandatory provisions pursuant to paragraph 58 of the NAR, proposed settlement agreement, written buyer agreements must specify, conspicuously disclose the amount or rate of compensation the MLS participant will receive from any source, or how much this amount will be determined. The amount of compensation must be objectively ascertainable and may not be open-ended, meaning you can't write on your compensation agreement, buyer broker compensation will be whatever the seller is offering to the buyer. We got to get out of that mindset. And this is an agreement between you and the buyer for your services, your fee for service. You might, like Jeff Lobb was talking about last week, you might want to get away from talking commission, using that word commission. Get back on to this, this is your fee. This is your fee for service. I'm representing you. So let's move on from commission talk. It doesn't sound quite as appealing to your clients when you're saying, this is my commission, pay it. Essentially, we want to be talking about your fee for service. This is why they're paying it, because you're offering this service to them and therefore you get compensated for it. Include a statement in the MLS that MLS participants may not receive compensation from any source that exceeds the amount or rate agreed to with the buyer. So I have these two highlighted because these are the main questions that have been coming up. So you can't have an open-ended compensation agreement with your client, and you cannot get paid more than the amount that you put in your compensation agreement. So that example would be you have call it a 2% agreement with your client saying, I'm going to charge you 2% of the sales price to represent you in this sale. And come to find out the seller was willing to pay 2.5% or 3 or 10, whatever, doesn't matter. You cannot make that extra money. You can only make 2% because that's what the buyer agreed. That's what you and the buyer agreed was your compensation. So keep that in mind when you're making these agreements, that you can't get paid more than what's in there. So if you're putting $2,500 in there because that's all they're going to agree to, prepare to make $2,500. Disclose in conspicuous language that the broker commissions are not set by law. This is in the agreements. We don't need to worry about this too much. I just wanted to point out these two right here in the yellow highlight because those are a lot of questions that have been coming up. So NAR policy will not dictate the type of relationship the professional has with the buyer, whether it's agency, non-agency, exclusive, non-exclusive, sub-agency, transactional, customer. So we're talking about a compensation agreement, not necessarily an agency. Term of the agreement could be 1 day, 1 month, 1 house, 1 zip code, doesn't really matter. Whatever you come to terms with your client is what it is. They're not going to step in and say that was too short or too long, or, not broad enough or anything like that. Services to be provided, ministerial acts, certain number of showings, negotiations, presentation of offers, type or amount of compensation charge, whether it's 0, flat fee, X%, X hourly rate. So they're not dictating any of that. They are leaving this as negotiable between you and your client. Open houses, I have been getting questions about open houses. What do I do? Can I do them? Do I need to buy a rep agreement? So if an MLS participant hosts an open house or provides access to a property on behalf of the seller only to an unrepresented buyer, they are not required to enter into a written agreement with those buyers touring the home, as they're working on behalf of the seller. You are permitted to talk to the buyers touring the home. Should your conversation progress into a situation where the prospective buyer would like to make an offer on the home through you, meaning dual agency, or tour other homes with you, at that point you will need to get a compensation agreement in place or prior to touring the other properties. So dual agency, yes, it can still happen, but you do need to have a compensation agreement in with the buyer. And, you know, truthfully, you have a little bit of inside track. If you are the listing agent, and you probably know if the seller is willing and how much they are willing to pay a buyer's agent. So, you know, you can put that together on your compensation agreement with your buyer and explain to them how things are going to work and things like that. But you still need to have that compensation agreement in place, even if you're dual agency. So keep that in mind. Compensation amounts. MLS participants may not receive compensation for services from any source that exceeds the amount or rate agreed to in the buyer agreement. Just reiterating that. So does this mean that brokerages can only have one agreement with the buyer? And that's false. The practice change empowers buyers and brokers to negotiate and agree to services and compensation that work for them. And we'll go through this a little bit on some of the forms as we get into that section. MLS participants should work with consumers to ensure they fully understand the options available. Compensation continues to be negotiable and should always be negotiated between MLS participants and the buyers whom they work with. Truthfully, anytime either a consumer or a real estate agent asks me a question about what's the standard commission, or is there no more standard commission, I stop them right there and I tell them it has always been negotiable. I want to make sure that everybody I talk to knows that it has always been that way. You know, even though the perceived was not, it has always been negotiable. So, and I want to make sure that everybody fully understands that when they're talking to me about compensation. At times, a new or amended buyer agreement may be appropriate, and the buyer and broker may agree to amended terms. You would use Form MT for that. However, amended agreements must also meet the requirements of the practice change. Practice changes must be implemented fully and in good faith in the service of promoting consumer empowerment, choice, and healthy compensation or competition. Can buyers and buyer brokers agree to a range of compensation? That's been a question coming up too. And I put between 2 and 3% on my buyer rep agreement. No, you cannot. Under the settlement, any compensation agreed to in the written buyer agreement must be objectively ascertainable and not open-ended. So that would be open-ended if it is between 2 and 3%, or if you're saying, you know, if I sell a home in this price point, you know, it needs to be ascertainable. It cannot be open-ended. So an example, written buyer agreement cannot have a commission that a buyer broker compensation shall be whatever the amount the seller is offering to the buyer or between X and Y%. Importantly, NAR policy will not dictate the amount of compensation agreed to by buyers. We just went over that. So lastly, I want to go over transactional brokering before we get into the forms. So this would be where you're just kind of facilitating the transaction. Maybe you're not representing them, but you are handling the paperwork, making sure it gets done properly, things like that. So here are some questions that come up with that. We have one, well, we have numerous ones going on. One just now closed like this, where our agent was just handling the paperwork, basically. So do transaction brokers have to obtain prior approval from a seller before an offer of compensation is made or paid to another broker, agent, or representative acting for a buyer? Answer is yes. Transaction broker who provides brokerage representation or brokerage services to a seller must conspicuously disclose to the seller and obtain seller's approval for any payment or offer of payment that a listing broker or seller will make to another broker, agent, or other representative acting for buyers. So for those of you who are wanting to continue to include buyer broker compensation in the total commission you are charging your seller, for one thing, I would just advise against that. Our forms are not designed to do that. They have not designed the forms to do that, and you're going outside of the protections of how these forms were designed to try and protect everybody, including us, the brokerage, your clients, everybody from getting sued again. So not saying it won't happen. I'm saying that they design these forms in a way. So just stop doing that. When you're doing your listing agreement, you're charging the seller for your service only. They can tell you that, you know, they want to offer commission and all this other stuff. That's totally fine. I do not recommend including that in with the compensation that you are, or the, you know, the commission rate you're charging, your fee for service that you're charging the seller. So just stay away from that. I think that, you know, potentially a phase 2 of this would be some sort of ruling where that will absolutely not be allowed. It's already getting a lot of scrutiny for agents who are wanting to do that and kind of continue tradition, I guess, if you want to call it that. Just kind of plan on moving on from that. But if you do that, it has to be disclosed on there, and there's really no spot on the RLA to do that. You're typing in other terms at that point. So there's really no space in the RLA to state that you will be out of your commission, because that's your commission that you're charging, the total, you know, compensating an outside broker. So you'll have to disclose that. The disclosure must be made to the seller in writing in advance of any payment or agreement to pay another broker acting for buyers, and specifically the amount or rate of any such payment. So this was actually just updated on 8/8. So you can see we had the settlement stuff and they are still making updates. This was 4 days ago that they updated this. So what if I'm charging a nominal fee to handle paperwork and advise the buyer, but I don't show them any homes? So maybe you're charging, you know, $2,500 and you're like, hey, you go view the homes and let me know what you want to offer on, and I'll handle it from there. You know, like a limited fee or service fee or something that you're trying to do. This falls a little bit under the transactional brokers. You are working for the client at that point, therefore you will need a compensation agreement. Even if you don't tour the home, you are working for them. So this falls under transactional broker services. You must have a written buyer agreement when they work with a buyer. The working with language is intended to distinguish MLS participants who provide brokerage representation for services for the buyer, such as identifying potential properties, arranging for the buyer to tour property, performing or facilitating negotiations on behalf of the buyer, presenting offers by the buyer, or other services for the buyer from the MLS participants who simply market their services or just talk to a buyer. Like at an open house or providing an unrepresented buyer access to the house that they have listed. So again, that would be working on behalf of the seller, would not need one. If you are doing this other stuff, then you are in fact working for the buyer and you need a compensation agreement in place. So, so this is different than working with an unrepresented buyer as a listing agent. So we have a couple questions. Let me pop in on those. Can you modify the buyer rep agreement at a later time to something lower? So I'm seeing confliction on that, but the big thing is it would need to be done prior to touring the home or essentially making the offer on the home. So you can't do that afterwards. So if you're wondering, well, I don't want to say they can't. They're advising against is what I'm seeing a lot of that. So you want to do it prior, like you're not going to get into escrow and then modify your agreement then, just because the seller was only paying a certain amount of money or something like that. So can they be modified? Yes, they can be modified, but just be careful on your timing with that. Another one, what if you have an agreement with your buyer, but then find a property that offers a commission by the seller that is greater than your agreement? Can you make a new agreement that benefits you and the buyer? Well, does it really benefit you and the buyer, or does it just benefit you? So that's an example where it would probably be frowned upon, where you modify your agreement because you want to make more compensation, which obviously we all do. But, you know, if it was you making more compensation because you have maybe a rebate agreement where you're going to rebate a certain percentage of your commission back to the buyer, okay, then this could be in the benefit of the buyer. But modifying it because you know that the seller is going to pay more doesn't benefit the buyer really in any way. It might actually be the opposite because, you know, essentially this is all getting factored into price, right? And ending price. So I think that that could be challenged pretty easily. I would advise that one. All right, so that's the end of that. Let me go over to, I'm gonna stop this share and go over to the forms. So let's go over buyer rep forms first, the compensation agreements. I think that's a good place to start. So the new one they have here, if you haven't looked at this one yet, I do like this one because it's a little less aggressive than the full-on buyer rep agreement. If you're just meeting somebody for the first time, the internet lead or something like that, you don't have that trust built up yet. Maybe your confidence is not quite there to go full in on the buyer, the buyer rep agreement. Take a look at this one. So this is the property showing and representation agreement, the PSRA. This one was newly added in that 724 forms update. So this or the buyer rep agreement is what you're going to be looking at essentially for putting compensation agreements in place. So this one is pretty much a home touring agreement, but it has compensation in there. So this is kosher. This works. So it's going to be the date prepared. It's going to be the buyer name and or names. It's going to be Rise Realty as the broker. And then you're going to put in the addresses that you're going to be viewing. And you could do up to 3 addresses with this. So if you're going to go tour homes this week with somebody for the first time, then you would put these 3 down there, or 2 or 1 or whatever. It could just be for 1. So you're saying that show or tour of the property, broker agrees virtually or in person to show or give a tour of the properties identified above to the prospective purchaser. Right to represent prospective buyer grants broker the non-exclusive right to represent prospective buyer in acquiring properties identified above. On the following terms and conditions, and then terms of representation. The items in these paragraphs are contractual terms of the agreement. Reference paragraphs provide further explanation. Says this form is 3 pages. More than likely, you'll just be going through the first one. Prospective buyers advised to read all 3 pages. So really, you're gonna kind of go over the 1, 2, 3, 4 here. Representation period. You're gonna put a beginning date and an end date. Cannot be more than 30 days. So this is not a long-term buyer rep agreement. This is for these properties you're going to go tour. Or the other default is or upon completion of resulting transaction, whatever occurs first. So broker compensation notice. So this is, you know, default language that they had to put in there that I was talking about previously. So we already have some of that, the requirements built into our contracts. We don't need to be typing other things in. Amount of compensation, you'll put right here of the acquisition price and, if any, this. So if you're charging 2% and $300 for a transaction coordinator or something like that, that's how you would type that. Or if you're going to do a flat fee, you're just going to check this box and then type in your flat fee and not do anything over here, okay? Payments received by broker from seller. If broker receives compensation from seller or others pursuant to a term of prospective buyer's offer to purchase or otherwise, the amount shall be credited against prospective buyer's obligation to pay a broker. So it's stating here on B2 that, look, you're agreeing to pay me this. Should somebody else pay me, it gets credited towards what you owe me. It's as simple as that. Right here, they have it. Again, brokers shall not receive any amounts in excess of paragraph 4B1, which is the amount you're agreeing to right here. Cancellation of rights and notice effective upon receipt or X amount of days. Any other terms, you can put them in here. Like I said, if you have some sort of agreement where you're going to do a buyer rebate of your commission to help them with closing costs or anything like that, that's a good other terms to put in there. And then we've got, just like how the RPA and RLA work, it references sections of the contract to talk about cancellation rights or payments approved by other brokers. That's all down in here. Really, that's all. It's a very simple, somewhat non-threatening form to use. I would recommend using this one for just meeting people and kind of getting to know each other if you even want to work together or not. So everybody will sign at the bottom and that one's done. So if you have any questions on it, go ahead and throw them in the chat. Look at 5B, pretty serious language. Yes, broker right to compensation. So read through 5B. Yeah, someone pointed out 5B. What if you're just sending them more than 4 homes to consider to go see? Well, you're sending them to go see homes? Because if so, you're going to need 2 of these then. And maybe you want to break those up if you happen to know what the compensation is or whatever. On the computer, just sending the mere fact that you're just sending someone homes is actually not working with the buyer. If you're doing research and running comps and stuff like that, yes. If you have something and you're just like, hey, here's 4 homes, what do you think? Essentially, you're not working with the buyer. So it isn't until you start actually working with the buyer that you need to get this in place. So if they want to go tour those 4 homes, you're going to need to use this twice. So, because they only have spots for 3 here. Okay. Let's look at the BRBC. Zip forms runs a little slow when I'm here on Zoom. I don't need that. We are, I've been doing a lot of updates on form walkthroughs. We're posting those. So they are in the online office in the contracts and disclosures section of the online office. And we're also posting them up in the Facebook group, walkthroughs on specific forms. So if you want to, take a look at any of those on how to fill them out and kind of, a walkthrough, you can go there. So, compensation. So we'll do the BRBC. So the BRBC starts with the agency. You'll put that in. And here we go. So it's going to be date prepared. You guys can see my screen, hopefully. I think you can. Right to represent. It's going to be the buyer name. It's going to be the brokerage, Realty. And then representation period. So this can be longer than 30 days, but not to exceed 3 months. So if representation period exceeds 3 months, this agreement is void unless buyer is a corporation, LLC, or partnership. So you can't put this in for 6 months, 9 months, 12 months like we used to be able to. These are for 3 months, and you have to renew it or modify it. Type of representation, it is defaulted to a non-exclusive, meaning you have this representation period in place, and any homes that you're working with them on, you could be entitled to the compensation. If they walk into an open house or something and you are not working with them, you didn't send them there or anything like that, essentially they can start working with the listing agent and not have to owe you commission because this is non-exclusive. This is for the properties you are working with them on. Now, if you want to make it exclusive, you're going to check this box. And that makes it to where if they buy anything that you are, whether you're working with them or not, if they buy something, they're going to owe you money because you have an exclusive right to be working with them, just like an exclusive listing. You would have an exclusive right to be working with them and represent them. So essentially you are under contract with them to represent them. If they go buy something else, technically they're going to owe you some compensation. So, you know, decide on which one is going to be best. Obviously, this one is much more aggressive, much safer for you as the real estate agent, though, to not lose the buyer. You can do it for 3 months. And I guess after 3 months, if things aren't working out, you guys can figure it out from there. Property types. So you're going to put in the type of property that they're going to be looking for. You know, you can keep it broad. It can be locations. You know, it could be as little or as much, you know, certain counties. You know, you need to put something in there. You can't leave it blank. But maybe you just want to put in the county that you're working in instead. And maybe it's going to be SFR, you know, SFR in a certain county, and then type in the county. So that leaves it pretty broad. If they buy a house in the county, and you have an exclusive, you're earning compensation that they owe you. Additional buyer preferences and priorities. This is a new form that came up, the BIPP. Yeah, BIPP. I'm not going to go over this one today. It's kind of an extension of this that really gets kind of nichey on what exactly they are looking for. I'm impartial on this form so far. I think it's a little, I think it's just extra paperwork. I would personally rather leave it a little broad unless you just have that buyer that's like, look, if I buy this type of home with you, then I'm going to compensate you, but anything else, I'm not working with you. I don't know, it could be used for that, I guess. Properties excluded from representation. You might come across that where maybe they are under contract, you know, they viewed the home with another agent that they have a buyer rep agreement, a non-exclusive buyer rep agreement though. They toured it with another agent. They're working with that agent on that property. So this could be excluded in there. They might want to put that in. Here we have the language that is needed for per NAR. So we don't have to type anything. Amount of compensation, again, percent or dollar amount. Sorry, percent and any dollar amount, such as something else you're charging them above and beyond the percentage, or just a flat dollar amount. You can attach a compensation schedule if it is, you know, maybe escalating in price, you know, if it's in this range, you know, then it's going to be this flat fee. If it's in that range, it's going to be this flat fee or something like that. Or maybe it's having to do with the services that you're going to be providing, you know, maybe you have tack on fees or something like that, the more that you represent them if you're trying to go with a limited model. Next up, we have the same language here as in the other one, that any payment being made from another party to you gets credited against what they owe you. Continuation period. So this would be kind of like in the listing agreement when it expires or cancels, that there's a certain amount of days. So if you type in 30 days here, that you could still be due compensation because you were working with that client on that property and they end up buying it from someone else, you could still be due the compensation. So obviously there's going to be rules behind that. So you'll want to go to 4C and read how that works. For the sake of time, I can't go through the entire thing. Cancellation rights, non-exclusive, cancellation effective upon receipt, or you can type in days. Exclusive, cancellation effective 30 days after receipt. So if you have the exclusive and you guys mutually cancel it, it's effective after 30 days of that date. time to deliver personal financial information. So, here you're getting your client to perform a little bit too. Like they need to provide this to you so that you know that they have money to compensate you for one thing and or close on the house. So you're kind of asking for a proof of funds up front. And that's kind of a neat thing that they included in, because now we're getting your client to kind of engage with the contract as well and do some performance items. Other financial considerations, buyer does not have sufficient funds to pay broker, or buyer intends to purchase the following loan product, which does not allow buyer to pay compensation to broker. That may or may not come up. Currently, that would be a VA loan, but they have, I don't know if I want to call it waived, but they are allowing it right now. Will that go into, complete effect soon? Probably. That's all stuff, they have to go through Congress and all that when you're dealing with VA. So it takes a little while longer for them to actually get stuff done. Other terms, put in whatever you're gonna put there. And then the rest are just kind of the rules, how the contract works, so on and so forth. And that's how you're gonna put this one into play. So use the one that you're gonna be comfortable with. Maybe you wanna start off with a touring agreement, move on to the BRBC once things, once you kind of get a better rapport going with your client, if that's the flow you have to take. So let me answer a question real quick. Can you put all of California or county and leave it broad just in case? I don't see why not. And per the NAR settlement, they are not going to dictate that type of thing, the specifics of the property. So I don't see why you couldn't put all of California and leave it broad. It could help you, especially if you have a client that is just like, I don't know where I want to move. I'm thinking about, inland or maybe up north, and then Andrew put in something about the VA, so, and how that's working with compensation. So next we'll go over the SPB, which is a pretty quick one. Maybe I'll just add it in here. I might have it actually down here at the bottom. Yeah, what do you know? All right, so we'll do the SPBB. So this is attached to the RPA. So as you're doing the RPA, which I can pop that in here real quick too. We can see how this flow is going to work and why this form right here, the SPBB, is so important for you to get paid. So computer's freezing up just a little bit, but so we're looking at the SPBB. Let's just go with that. So I'll show you the RPA in just a sec. There we go. So on this one, you will check the box in the RPA, which I'll show you in a sec. If this is going to attach, and it'll probably be already filled in, but if it's not, this is how you fill it in. It will be the property address, buyer name, seller name, Rise Realty, who the listing firm is, and then the date that you're sending out this offer. Now they did modify this one, so it is different than how it used to be. It's much more simpler. You're really just filling in one thing. There's not all this extra math now because you can't get paid more than what you have in your buyer rep agreement or your compensation agreement. So before you had, section 123, I think on it was like, the compensation amount and then what you have and then the difference. Now it's just, hey, I'm letting you know that I have a buyer broker agreement for X%, or X dollars. It states in here, maximum seller payment obligation. Sellers shall not be obligated to pay the buyer broker the lesser of the amount specified in 1A, the amount buyer is obligated to pay buyer broker pursuant to their representation agreement, and if applicable, less than any amount that others have agreed to pay the buyer broker. If there is, right here, this is the most important for us. If there is no buyer representation agreement, then seller has no obligation to pay buyer's broker. So if you can't fill this out and not have a buyer compensation agreement in place, either the BRBC or the PSRA, because you're stating in here on 1A that you have that in place and you're going to pay me X percent, or I'm asking you to pay me X percent, or X dollar amount. But if you don't have that agreement, then this doesn't work. So that's what I'm saying. These forms are all designed in a way to meet the parameters of the settlement and for us to still be able to be compensated properly. So, yeah, be sure that you fill out this form, and be sure you have a compensation agreement. That whatever amount you have in the compensation agreement should match here, or should be no more than what is in here. I guess it could be less if you know the seller's not going to pay your full agreement with your buyer, and you're just trying to get them to pay something, then you can put that in here. As long as it's lesser, is fine. It just cannot be more than what you have. So when you're doing the buyer, the purchase agreement, which we're on right here, now G3, you should be checking this every time, which is going to attach that SPBB form. So if you don't check that, you're probably not going to get paid, at least from the seller. Now, you do have an agreement with the buyer still. So if you know that the buyer is going to be paying you regardless, and they don't care to even ask the seller to pay, then I guess you wouldn't check the box. But more than likely, I'd say the bulk of the time you are going to want or ask, or the buyer is going to want you to ask and negotiate your commission with the seller to see if they will pay, because that's less closing costs for the buyer. So that's basically how the flow is going to work. You'll have your compensation agreements in place. You'll go to write your offer. You'll attach the SPBB. On the SPBB, you will type in the amount of compensation that you have in your compensation agreements with your client, and you will negotiate your commission separately. Now, the question that comes up often is, from the listing side, my seller is not agreeing to pay the amount that is on the SPBB. What do I do? You put it in a counteroffer, which sounds like it goes against what we've been taught all these years, to not negotiate commission in here, but that's because it was broker to broker, and we're not a party to the contract. But now we're negotiating the commission on behalf of our client to try and get the seller to pay it and get it credited against what they owe us. So yes, you would not sign the SPB. Let's say the seller says, I don't agree to 2%. I only want to offer 1.5. You're the listing agent. Then you're going to put that in your counteroffer that the seller agrees to pay buyer's broker 1.5%. You can say, to expand on that, you can say seller does not agree to 1A of the SPBB, or you can say 1A of the SPBB to be 1.5%. And that's how you will handle that on a counteroffer going back. And if the buyer wants to counteroffer back again, you're going back to the counteroffer, putting it back in there and saying, that the seller, that the buyer is going to ask the seller to pay 2% again, or 1.75, or whatever you're doing there. So it's just, you're negotiating it that way now. So, are there any other questions on it? If there are, just raise your hand, throw them in the chat, whatever's easier for you. But, you know, moving forward, these forms are not hard, but you need to make sure that you have them in place. I would definitely read through all of them, and that way there you can speak fluently when you're presenting these to your new clients. And the positive with this, well, there's lots of positives actually. One is I really do believe that it's you know, making us look more professional. You know, this is our opportunity for us to be more professional and to take this a little more seriously when you're on the buyer side, and to show them what the value is of a buyer agent. And there's numerous examples of that. I've gone over a few as well, but yeah, there are a lot of positives. You know, I think that the chances of losing clients could to listing agents and things like that could be far less. We have one question in here. As a buyer's agent, will we be able to see what the seller is paying the selling agent? No, they will not be putting that in MLS. I am seeing a lot of agents saying they're ordering sign writers and things like that because there's no rule against putting it on a sign writer. It just cannot be in the MLS what the compensation is. Some offices are going to be putting them on their personal websites what compensation is. Can you ask? Yes, you can always ask. I have a feeling that potentially the sign writer thing and stuff like that might get challenged as we kind of move through this in the coming months, coming years. Same thing with, you know, personal websites. Who knows what's going to happen, but I can see them not liking that after a period of time. So our riserealtyca.com website will have that ability to put compensation in for our own listings only. I haven't decided yet if I want to implement that because I'm just not sure that it's a good idea, actually. Just based on what I'm hearing and kind of reading in between the lines of what, you know, these NAR guidelines are and things like that. So I think it's best, you know, if you want to just ask what the compensation is, ask what it is. I am getting reports of sellers saying just submit your offer and ask. They're not going to say. Just like they're not going to tell you what the seller's bottom line is, you know, and that's really what it comes down to is they want to negotiate the full thing. They want to negotiate your commission. They want to negotiate the terms of the offer, the price, everything. So, because that all factors into the seller's bottom line. So, you know, a listing agent saying, oh yeah, they're definitely going to pay 2.5%. And then you give them kind of a, you know, a low offer or, you know, an offer that just isn't meeting what they thought. And they say, okay, well, you know, maybe I'll do 2% instead, or maybe the seller's going to feel stuck that they said they would, you know, 2.5% kind of puts the listing agent in a, could put the listing agent in a little bit of a bind because they verbally told the other agent, yes, 2.5%, no problem. So I would steer away from that as well, in my opinion, if you're a listing agent. But can you ask? Yes, just like you can ask listing agents any other question you want to ask. They just may not tell you, you know, like, how many offers do you have? 3, great. Are you over list price? Maybe they'll tell you, maybe they won't. Can you ask? Yes, there's no rule against asking. So any other questions? If the seller offer 1%, can buyer pay the remaining commission to the buyer's agent? It's not a matter of can they, it's a matter of they are obligated to. So if you have a 2% buyer compensation agreement with your client, they owe you 2%, regardless of anybody compensating you from the outside. So technically, yes, they still owe you 1%, and that will become part of their closing cost because you have an agreement with them that you are working for 2%. That is your fee for service. And any money that gets paid that you can negotiate for them from the seller side is essentially a bonus of them not having to pay the full or as much as they agreed to pay you. So yes, the 1% would be credited. Technically, you have a binding agreement for them to still pay you another 1% at closing. So that is how it works. Like I said, you want to kind of get away from talking about the seller so much and things like that, and focus more on your value as a buyer's agent and why they should be paying you, and that you are going to be negotiating this commission as well during the offer, to get the seller to, reimburse, credit, however you want to put it, their obligation to you to pay. So that's part of your job as well. So hopefully that makes sense. Any other questions on compensation, how it's going to work? I don't see any others coming in. So feel free to give me a call if you have anything kind of specific that you want to get covered here. This does go into effect here in the next 5 days. So we essentially, which is what, the weekend? It's a weird time to start it. So, this is basically the last week of doing it the old way. I would start, getting these in place with your current clients. One of the benefits is after the 17th, they're going to have to do this with everybody. So those that will not do this are going to have a real tough time out there showing homes. And if they do find an agent that will show them homes, that agent is putting their brokerage and themselves into a really bad predicament. So I highly advise against that. So basically, this is just how it goes now. Everybody's going to be doing it after the 17th, which will make getting these forms signed, the compensation form signed, a little easier, I think, because everybody's doing it. So it's the way it's done now. So I think that will make it slightly easier. Do we have to do this with clients in escrow? No, but if you drop out of escrow, yes. So yeah, anything you have going on right now that's in escrow, those terms are agreed to. So and it's not required. But starting on the 17th, anything new, any new clients you're working with or new properties that you're going to go tour with these clients that you've been working with already, you will then need to get a touring, the property showing agreement or the BRBC in place with them. And unfortunately, that's just how it's going to work. But if you are in escrow already, you don't have to do anything. Just, hopefully close the escrow, really. So, but if you drop out of escrow, yes, you will need to get one in place then, because you're going to go hopefully start touring more properties again, and that will fall under the new rules. So. All right, well, just a little bit after 10, so made pretty good time on that. Again, we are doing a lot of updated walkthroughs, video walkthroughs on forms, how to fill them out, what they mean, a little more detailed than what we did today. I just wanted to kind of go over flow a little bit today, and what is needed on the minimum. So look out for those. They are in the back office. And we are posting them in the Facebook group as they get done, basically. So any questions, though, give me a call, and I hope everybody has a wonderful week, and I'll talk to you soon.